Hello and welcome to MENTFX. We are T-minus 30 seconds from starting this beautiful presentation. We are maxed out on the participants that were able to join this exclusive, free, premium workshop where we're going to break down a full trade plan for them. And, well, there's no better way to start this than to start a recording of it, show you guys some of the parts of it, and get right into the action. So, without further ado, let's get going. Boom. Hello, everybody. Welcome to the MENTFX premium and free trade plan workshop. What's up, guys? Hello, hello, and hello to everyone here. Now, as I promised, first of all, can everybody see me or at least hear me, and can everyone see my screen? Those are the main things I want to make sure that everyone can see. Okay, beautiful. Fantastic. What's up, guys? So I suggest that you can have the little chat of the Zoom. Oh, yes. Thank you very much for that. I'll make sure that all annotations are disabled. I appreciate you for that. So make sure, first of all, that you have the little Zoom chat open so you can just kind of follow along with what's going on. We have a beautiful thing in front of you today. This is going to be recorded and sent to each of you that have an insider subscription, which means that you are already here, so because you guys got here through the insider group, or if you're part of the private mentorship, which everyone will have access to after this. So it seems like you guys can hear me and see the screen, which is good. Everyone can see the screen, right? Okay, beautiful, beautiful. And we're not going to waste any time. I came here for a specific reason, and this whole thing is recorded, so the recording has already started. And the main reason is I want to present to you a completely free and full trade plan case study that you can start utilizing today, regardless of who you are. Whether you're a private paying member or a completely free public YouTube-based member or someone that has just followed me for a while or has just found me, today is the day that I present to you a full trade plan that you can now take with yourself and actually use, okay? Yeah, no audio. Click on the bottom left and enable audio. Yep. So I want to give you a full trade plan that you can take with yourself right now and use. Let's get into it. I told you guys I wouldn't waste time. We'd start on time. So right now we are getting started. Let's go. And for anyone that can't hear it, it's very unlucky, but you guys should be able to turn on your sound. All right. No more waiting around. Let's go. So let's get right into it. Important notes, guys. Before we go through any part of this trade plan, this entire trade plan, everything taught within it is based on fractality. It's a true fractal concept. What that innately means is that you are going to be able to prorate and use this system on any time frame that actually fits you as a person. So many areas that you've learned before, many of the mentorships you've been in, many of the courses you paid for, many of the Instagram quotes, whatever the fuck you've seen out there, have read, a lot of the systems taught are not inherently fractal. A lot of those systems that you have learned before are actually systems that can only work within very specific circumstances and very specific timeframes and very low timeframes. Today, we're undoing that. We're giving you something that you can use fractally across all timeframes, across all markets, and use it on the timeframes that make sense for you as a trader. So I'm going to be showcasing this on a specific timeframe for the sake of the video and the trade plan to show you actual examples. And then at the end, we're actually going to show even more. And just remember, this works on all timeframes, unlike many of the systems that you've probably been taught out there before, especially for money that you might have paid for them. You're going to get it all for free with a lot more info, okay? Now, this is a tip of the iceberg. What that means is that the presentation today, the trade plan I'm giving you, is an extra basic view of what I actually do. And that's because trading, as a lot of you might know, is an evolving and consistently refined skill set that becomes more and more refined, and you become better and better at over time through experience, through data collection, and through all the things that I vouch and speak for on my public channel, as well as in-depth privately. This is a tip of the iceberg. This is something that you can start to use, that you can understand, and will give you a much better understanding than anything you've actually learned before, okay, from a standpoint of other areas. But I want you to remember this is the tip of the iceberg. This is me simplifying years, over 14, 15 years of knowledge. This is me simplifying the things that my members have done to get funded. This is me simplifying what my free public YouTube has taught others to become funded. This is simplifying and creating a trade plan out of all of that, giving you true examples that you can then take for yourself, utilize, and get better at over time. This is the tip of the iceberg. It goes a lot more in depth. Of course, we're not going to be able to present it all right here, right now, but it's gonna be fucking juicy, okay? It's gonna be as juicy as you can imagine. Now, very quickly, for the people that's saying they can't hear, guys, if you can't hear, clearly, many can. It's on you, fix it, okay? That's as far as that goes. So let's keep going. Now, another important note. This is not the only way to enter. Of course, there are countless good ways to get involved, to enter trades, and I teach many of those, and I've taught them, and it's on my public, it's on my private, all the fun stuff. This is not the only way to enter whatsoever. This is just, once again, a trade plan I'm presenting to you. This is also not the only way to manage, right? Today, like I said, I'm presenting you a full trade plan that you can start using right now. Just because I've said it does not mean it's the God's word, the only thing you can do, and it's the only thing you're going to be able to do. There are many ways to manage, and actually, personally, my management has evolved over time, and my management is very different from the management you see today. But what I need to do for you is lay a foundation that you can start using so you can see true success and start building up true data and actually see some form of confidence be created so you can do this long term and evolve it over time. Okay. Also, this is not the only way to fill in the blank. A lot of the things I talk about are not the only way to do it. This is not the only way to enter. It's not the only way to manage. It's not the only way to move to break even. It's not the only way to actually enter fractally, etc., etc., etc. There are many ways to do things, and I teach all of these through my channel. I teach these through my private mentorship. And this is kind of, if this is the first time you're seeing me, this is again going to act as a foundation that's going to give you close to everything you need. Let's go. And most importantly, before we start on this beautiful, beautiful journey for all of you, this is a framework. This entire trade plan itself is a framework for patience. What that means is I'm giving you a step-by-step trade plan that will inherently force you to wait for the good setups. You're going to be taught patience through the actual trade plan. And unlike every psychological coach out there, unlike every new YouTube channel and Instagram quote out there, I'm not going to sit there and pretend like there's this special little thing that I can say that's going to fix your patience. Instead, I'm going to give you a step-by-step model to truly appreciating and approaching price action that's going to create, in turn, a framework for patience, which is one of the main things I teach. One of the main things I teach is that if you want to fix the emotional, you actually have to fix the data collection, the actual strategy, the approach. You don't have to fix the how do I feel about this? Because that's not going to help you. There's not these little fixes to emotions. There's actually the overall skill that you're learning. And the better you become at the skill, the more confidence you gain with the skill, the more the emotions are fixed as a result. So what I'm giving you today is not just a trade plan, but it's actually a psychological fix that you need. And it's, as a result, a framework for patience. Let's keep going. It's a two-step system. That's it. It's as simple as that. You're going to get a two-step system today, and you're going to get every part of it, okay? And before we go any further, I want you to, after this video, I want you to take this. I want you to use it. I want you to trade with it. Again, not financial advice or any guarantee of any sort, but I want you to go and test it and get good at it. And then I want you to find some form of consistency or profitability with it. Then, after you felt that you've received real value, okay, that means through all of this, I don't even want you to pay me or anything like that. I want you to go and use all of this for the next few months, even until the next year. And if you feel like you've received real value after that time has passed, I want you to take that understanding to the next level and hopefully become a part of my team. Now, this is the only time you're going to hear me say this until the very end. I am not going to bullshit any of you. A part of this presentation and this workshop is also to have more people come onto one of the best teams in the world, one of the paid teams. So I'm not going to sit here and be like, this is not a sales webinar. I'm going to, oh, here we go, loody-doo, and I'll sell you. No. Part of what I'm doing here is I want to sell to you, but it's only going to come at the end. This is the first time you're going to hear me say it until the very, very end. Other than that, I want to offer you true value so you see what you're missing and how much you've been spun in circles by many of the other areas you've learned from before. One of my main focuses of this right here is to take free students, the people right here, right now, and the people that rewatch this through the insider group. I want them to become funded, find some form of consistency, some form of profitability, or start seeing that, holy shit, this is the way, and then I want you to become part of the team. That, in essence, is just so you guys understand how every single student that I have right now basically came. And at the end, for those of you that stay, I have a very special offer, so stay tuned. Now, let's get past the bullshit, the two-step system. Why is this system very, very powerful? The first thing is that it's based on true market mechanics, okay? And what I mean by that is it is truly taking into consideration trend and then understanding why trends work. So basically understanding why trends working is key, and then how to use that for yourself. Not this bullshit of, hey guys, if it's making higher highs and higher lows, you can draw a little this and do this, and then if it trades to the zone, I'm not gonna sit here and bullshit you because everyone loves to say trend, 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 but nobody actually teaches nor trades with the trend. Today, I'm gonna show you how to actually do that and teach you from a standpoint of true market mechanics in terms of how real liquidity is formed, okay? And how trends actually sustain moves and how you can become a part of those actual trends. So it's a two-step system. You guys, just so you know, you can write some of this stuff down, but remember, you're getting a full PDF trade plan as well as this entire presentation, the video, after. So some of you can write this down or you can sit here and just take it in. So number one, the first step of the system is, the audio's cutting out. I doubt it. Can you guys hear me? 3, 2, 1. Can you hear me? Everyone's saying yes. So the audio's not cut out. Fantastic. Thank you guys. Number one, first step of the system is context. I'm going to teach you everything you need to know about that. I'm not just going to say that word and be like, loop-de-doo, have fun. The first part is context. The second step is entry system and the criteria. That's it. That's the entire two-step system. So let's get right into it. And just so you guys remember, this is all recorded and will be sent to you as the insider group after its completion. Let's get into it. Context. Beautiful little iceberg we have here, okay? A reminder. Everything that we're about to go over, again, is a tip of the iceberg. What that means is that for context, and a lot of you private mentorship students as well as long-term public students know this, the context I'm about to go into is a very, very surface level. It's a tip of the iceberg. It can be used and it can be made into profitability and consistency, but there's a lot more to it. And that I teach publicly and privately. It's a tip of the iceberg. Let's get into it. It's also a beautiful framework for patience, because when you understand that you're waiting for a specific thing to happen, aka context, what does that innately mean? If you're waiting, that means you have the ability, the skill, the mastery of what we call patience. And if you can execute upon patience, you've already, hint, hint, outperformed over 90% of people, because 90% of the people losing in this market are usually impatient. They are FOMOing. They are getting involved in any and every single trade that they can personally find. And as a result, they find themselves losing over the long run. Patience is the one thing that may actually determine your profitability. So if you can focus on some of the things I teach here and establish a little bit of patience, you're going to do a lot better for yourself, okay? So for context, I'm going to make myself smaller so I'm not in the way. I'm going to put myself up here. There we go. So for context, you have two tools. For today, for the context tool, we're going to be using the MENTFX sentiment tool, or based on if you're a private member, the premium screener. For this specific trade plan, we're going to be just talking about the sentiment tool. Very quickly, if I drag this in front of you guys, can you see this? If I drag this in front of you, can you see this? Okay, can't see. Okay. So let's do this instead. If I do that and then I do this, can you guys see this? The exclusive MENTFX workshop in front of you. Can't see. Okay, cool. So if you go to mentfx.com, simply go to mentfx.com and go to more, there's this thing called the sentiment viewer. It's completely free. You can open it and you will see, dun, 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 this, okay? That's all you have to know. That's where it's found. Let's continue. So for context, you have two things. You have the MENTFX sentiment tool, which is what I just showed you, and I'm going to show you even more in a second. And then the second part of true context is the higher time frame SSC or the reaccumulation / redistribution model. Okay? Now we're going to get into this. Don't worry. Everything that sounds like gibberish and like alien speech right now will all be made understood to all of you. And by the end of this, you're actually going to have a real trade plan to approach and use for yourself. So These are the main things. You can write those down. For context, you have the tool, the sentiment tool, and then you have the higher time frame SSC or reaccumulation redistribution model. And for today's specific teaching, for today's trade plan that I'm giving to you, because I said it's fractal, we're actually going to be using the rule of 30, which is a video I've made before, and this will all be included in the PDF, because it's an easy rule that will make it easier for you to understand this. But also, a reminder, even with the rule of 30, this is all still the tip of the iceberg. This is not all I use in my trading, but it is much more than enough to go and find funding, to find consistency, all the fun stuff. All right, let's do it. So, mentfx.com/sentiment. This is what it'll look like. This is what you're going to get to. Context example. So now we're going to be doing a real life example right in front of all of you. Okay. So on 10/16/2023, that's October 16th, 2023, that's when I actually made, just so you guys know, that's when I made this overall presentation. So I did it on this day because I wanted to see the real life values, the real values in front of me, so I can give you a full real trade plan. So number 1 of 2 is the sentiment for context. All you do is you head over to the sentiment tool. And for this specific teaching, what you're going to look at is you're going to find a market that has a 70 to 80% or higher, okay, daily bias. Okay, so preferably you want to find an intraday plus a daily. You want to see the conjunction of both. You want to see them aligned. I wrote here daily alone is fine as well. The intraday can be a 55% or higher. Okay, and this is the first definition of true quote unquote trend. Okay, so what I want you to understand is that these numbers can be changed a little bit based on your system. But for today, I want you to write this down and just remember it. This is your trade plan. 70 to 80% or higher on the daily and 55% or higher on the intraday. And before we even continue, notice what I'm doing. I'm already creating some form of framework of patience. You have a form of what you're waiting for in any given market already. And already, does everyone see? Okay, you can now you can say a yes or no in chat. Does everyone see how just this tool alone is starting to establish a true form of trend? Okay, so when I say you look for a 70 to 80% institutional side, as well as a lineup of the intraday, does everyone understand how that innately, without even looking at the charts yet, is showing you some form of trend? Yes. And like Hossam says right here, he said the bias is already established. Exactly. What we're doing is before we even look at the market, we are now looking at the overall prevailing trends at the markets. And in the case that they're in the higher values, we know that there's going to be some form of potential alignment there. Okay. If we trade the lower time frames, can we use intraday alone? So again, I'm not going to go over questions right now. Questions can be later. Right now, we are getting through the trade plan and I want to give it all to you. So that's the first step. You now have a way to look away from all the bullshit that might be all the markets. And you also have a way to distinguish this unnecessary way of believing that you can only trade one pair or one market. A lot of people love to tell you, you must trade the US 100s of the world. You must be on this market. It's complete nonsense. Markets are cyclical. Money moves into and out of markets cyclically. Context of markets change over time based on the fundamentals in the entire world. And what we can simply do is analyze the underlying trend of that market and decide whether or not it's in a good market to trade or not. And we can simply look to the next one. I'm not here to teach you the best market to make money because that doesn't exist. Wow, what the fuck? So instead, I'm going to teach you what actually matters. We're finding a market innately that already meets some form of characteristics for a trend, okay? And for today's example, we're going to be using a bullish trend. So as you can see right here, on the exact day, 10/16/2023, which is the day that I made this presentation, this was the reading of CAD JPY. Does everyone see how these green ones, this 88% on the daily and 86% on the intraday, align with the rules that I gave you right here? Does everyone see how those rules align, first and foremost? Good. Those are the rules aligning. This happened on this day, not after, not in hindsight. On this day, this is what was happening. Let's go to the next part. Context example, 2 of 2. So only once you've found a market that is meeting this criteria right here, okay, thereby you have a trend. Now we're going to look at the real context example. What we're looking for is a higher time frame SSC or a reaccumulation / redistribution model. Before I go further and talk about this, this is an example of an SSC. It's as simple as that. You have a range on a time frame, and I'm going to give you the time frame today as well, on some kind of time frame, usually a higher time frame, hence the higher time frame SSC or reaccumulation model. You have this happening. Price has returned to a demand zone or supply for bearish, but right now we're doing only bullish. So flip this all for the future, but right now we're only talking about bullish. When price returns to the demand zone of an SSC and then begins moving long, okay, something you'll notice about this is it started to move long a little bit. That's a context being met of a higher time frame SSC. SSC simply stands for Structure S&D Confirmation. It's a system I teach. It's called the 3-box system, okay? But all you need to know, without me even needing to define it, is that this is what it looks like. You have structure, a range, and S&D, prices come to it, and the confirmation that price is potentially moving from it. That's what it really means, an SSC. The range is being held and moving from. That's a demand zone. Fantastic. And this, on its right, is an example of a reaccumulation model. Price is currently moving higher and making, as you can call it, higher lows. The protected lows are shifting higher and higher and higher, and most recently, there's been a disruption. There's been a breakdown in price. And not only that, but prices began to move long a little bit since then. This is a reaccumulation model. Now, if our time frame of entry for today, so for the trade plan I'm sharing with you today, the time frame of entry is going to be a 1-minute chart. So assuming that we're entering on a 1-minute chart, the rule of 30 simply states that we're going to be using a 30-minute chart as our higher time frame. That's as simple as it gets. So, guys, if we're using a 1-hour time frame as our time frame of entry, what time frame would we be using on a higher time frame to validate it? If we're using a 1-hour chart as our time frame of entry, okay, only one guy got the answer. Now, this proves to me that people cannot do their multiplication, but that's okay. Yes, we would do 1 hour times 30, which is 30 hours. So your higher time frame would be 30 hours, which is most closely linked to 1 day. So if you were using a 1-hour chart instead of a 1 minute, instead of using a 30-minute as your higher time frame, you would use a 30-hour. It's as simple as that. If you were using a 1-day chart of time frame of entry, what would you be using as your higher time frame? Yep, a monthly or 30 days. Exactly. That is the rule of 30. Again, it's a tip of the iceberg, but it's a rule that you can use right now for fractality and, as I said, to use on any time frame that makes sense for you. So, the 30-minute chart of the pair that we're looking at should provide us a chart context from a higher time frame SSC or a reaccumulation or redistribution model. And again, this is the tip of the iceberg. Just like I just said, we're using simple tools that I've taught publicly without going any deeper. And once again, this is a framework for patience. Does everyone understand how waiting for this is now again creating patience in you? Does everyone see that and understand the importance of waiting for specific things, especially across timeframes? So people are saying yes, that's absolutely beautiful, phenomenal. So once again, okay, in this scenario, you now have a trend defined, but not even. You have the beginning of a trend potentially defined, but you're still not following something because guess what, guys? When these are very bullish, can prices still go down? Big note, they can. If a market is bullish, let's say UJ, for instance, I've been kind of, I apologize for it. Okay, I've been bullish on UJ. If I'm bullish on UJ, there can be times where the market's moving down. But the beautiful part about that is that now we have another failsafe to be patient during markets that are not clean or are not good, and instead can wait for specific formulas to actually start getting involved again. Okay, so just remember that. There can be difference between those, but as I said a second ago, we have multiple things in place for that trade plan to work for us and to actually retain profitability and consistency. So it's a framework for patience. Okay, this is what we're looking for. Now, a lot of you might know this. If you don't, then phenomenal. You get to learn about something brand new and for free today. The way that I look at ranges most of the time, now you can look at intermediary ones as well. This is the tip of the iceberg, blah, 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 is by using the free MENTFX structure indicator, which is available on TradingView. If you go to TradingView, in the indicators, type in MENTFX indicator or MENTFX, you'll see it. I will also include this in the PDF, so you don't even have to go and write this down right now. It'll all be there and you'll all have it on your emails, okay? But this is what the MENTFX structure free indicator looks like. And before I go any further, just to remind and show you guys, the premium indicator, for those of you that are here as the premium group, of course, is having amazing things added to it all in one, where it shows the models at the bottom, it shows the ATRs for the risk management, it shows the actual numbers of breaks, it gives you the MAs, all of the fun stuff, okay? Not really important. Just know that this is what stands between where you are now as a free member and what stands in front of you as a potentially public one, okay? I mean, as a private one. So just remember that. Nothing too crazy, but there you are. So chart context. Why? Why is what I'm giving to you the fucking sauce? Okay, why is this so amazing? Well, because of what most people don't understand, and that is how liquidity truly functions. Most people are taught to think that liquidity is this amazing thing where you need to find the imbalances and the back-to-back price action and the Wyckoff spring UTAD and the equal highs, equal lows of inducement, etc., etc., etc. That's not how liquidity is truly formed. That is a form of liquidity that might exist on a 1 minute or sub 1 minute time frame, which actually is not helpful to you because you're someone that probably, I hope, wants to develop a system that he can rely on for himself, understand why it works well, and scale it across time frames if he ever wanted to. So that's what I'm giving you today. So the reason this works so well is because when you have this kind of movement, oftentimes what's happening is most traders are already focused on everything on the inside of this leg, looking for shorts and shorts and shorts and shorts. And that builds what we call the clouds of liquidity. That's where true money is engineered. It's not through equal highs. It's not through all these random areas that we can find. It's just through the understanding of how trends work and how people incorrectly focus on pinpointing tops or bottoms, etc. So in this example, now, this is going to actually give you a little bit more of that tip of the iceberg I was talking about. When we're using a 1 minute, the 30 minute is likely going to give you the best context or model for this to look for. But as you get better at this, you're going to start to notice that you can actually play around. Even on a 1 minute entry, some of you might find that you can find a nice setup on a 15 minute, a 1 hour, or a 2 hour, right? You can find timeframes around that 30 minute, a 45 minute, a 50 minute to work for you. In the beginning, I would suggest just use the 30 minute, make it super simple. 1 minute entry, 30 minute context, and that's it. All I want you to remember, okay, is that over time, you will once again make that change and get better. This is that tip of the iceberg. You will get better at what timeframes you can use, etc. You can also use other things like 2.0s, which is something that I teach, I think publicly, but very much privately, using 2.0, so zones off of zones. That's all it means. I'm not going to like bullshit you. That's what it is. Multi-time frame, so again, using more than one time frame. This is how you get better at this. Further models, so again, other models and fractals within models. That's another way you get even better at this. I just want to remind you that there are other things you can do, but right now, all we're looking for is 1 minute entries, 30 minute confirmations because of the rule of 30. And again, these setups create clouds of liquidity. This is what true liquidity looks like, and this is why this works so powerfully. If we have the trend established with our sentiment, okay, the one that I provide, and at the same time we have the actual market established, then what we're doing is we're basically taking out all the people that don't understand how markets work. Because I'm going to ask you guys a crazy question right now. Some of you here might be in other SMC spaces. Do you know what this right here looks like on a lower time frame, on a 5 minute, on a 15 minute? What do you think happens right here? I'm just going to ask you. For those of you that are part of like the other SMC sides, not just stop losses. Yeah, there's stop losses here, but why? Yes, beautiful. Because close to every single other trader is looking at the imbalances here, at the change of characters on a lower time frame here, at the distributions, to sell back into a zone, to sell back into a lower zone, a lower zone, a lower zone, into the equal lows here, blah, 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 blah. All you need to understand is that you are simply taking out those clouds of liquidity, the true liquidity. Once you understand this strategy becomes so fucking powerful because you realize how simple your trading could have been rather than looking at all these like weird highs, lows everywhere, predicting who's going to get taken where. Complete nonsense. Ignore it. Now, both of these as contextual tools, just so you guys understand, are very, very powerful. Okay? However, I would argue that the reaccumulation, the one on the right, so the image you see on the right-hand side is more powerful, arguably, because in that scenario, what you have is an already established bullish market that is now shifting short or breaking down, aka reaccumulating. So you know that even more people, are going to look to be sellers when they should be buyers. This is how, time and time again, trends sustain themselves. Just as a quick reminder, before I go any further, I have been putting out public videos on YouTube, on UJ, since this price action right here, talking about how this will make a move on this high due to these clouds of liquidity and higher. Just so you guys remember, this was all made public, not in hindsight, but beforehand. And since then, me and my team have followed this up, and I've seen an astronomical number of people get funded just on this pair alone from this move. So remember, this is how markets move, okay? Someone asked, is it not possible to somewhat combine those two models? Well, what did I say? This is the tip of the iceberg. There are further models, and there are multi-time frames. That's exactly what I just offered. So remember, listen to what I'm saying. Remember that this is a first starting trade plan for people that are completely new or need a trade plan to actually focus on because they've been going in circles. I cannot go into the depth that I want to go into. No shit. So please just pay attention to what's being told and taught right now. Thank you. All right. And a big point. These are representative of what? Trend. Remember what I said at the beginning of this. I'm giving you a true and a real trade template. Nobody else that you've probably learned from has given you a real trend template. Hey guys, higher highs, higher lows. Good luck. Trade from here and there, but sometimes go against the trend. Good luck. It's complete nonsense. Now you have a way to wait for the money to be there, and now you have a way to be patient for the actual setups to be there before we've even made, okay, a trade. So Silas John, can we please have him banned? So I have a few moderators in here. We can ban this guy. I'm sorry, but spam is not going to be allowed. So this guy can be banned. Thank you. So the trend is now prevalent, and we are basically giving you the real fundamental ways to view true trend. Fantastic. We have context outline now. Here's that context example of that same context on that same day. Remember, what did I say? We're going to look at CAD JPY because of this. This is on 10/16. This is the exact live readings of that day. That same day, this is where CAD JPY was. Here is a 30-minute chart. What we have here is a clear reaccumulation model confirmed. How so? Look at what a reaccumulation is. Remember it. Again, you're going to get a photo of this in your PDF, and you're going to get more examples. You have a market that has started to make higher protected lows and has broken down most recently. And now that's what we assume is a reaccumulation model. Now notice something very, very important. Does it look like I'm taking trades, or am I looking to take trades in all of these little areas here just at the low? Am I forcing shit? Am I taking all the longs I can? It's at the low. No, there's not a single long taken here. In fact, the actual example in front of you today is when price is already right here. What is price at this moment showing us? Why am I looking here? Price has already started moving long within the reaccumulation model. What is that giving you more of? Confirmation of trend, okay? So you have a reaccumulation model that's happening right now on a 30-minute time frame. Now, over time, you get better and better at this. Again, the tip of the iceberg. Further practice and more education. As you start understanding intermediary structure, intermediary models, as you start understanding how to use S&D 2.0s, as you start to understand how to use multiple time frames and models on multiple time frames, etc., this will get better and easier and more refined. And with further practice, you'll be able to keep out of more quote-unquote choppier price action. Okay, this is the stuff that I teach as depth goes on and more privately, of course. But this is a reaccumulation model. Simply looking for this right here. Price is moving long with the MENTFX structure indicator and has broken short and then began to move long. Price is moving long with the MENTFX structure indicator. Just so you guys know, these gray lines that you see on my chart, I don't draw them myself. These are drawn by the MENTFX structure indicator. It's in front of you. So when I drew this in, I didn't draw this in myself. It was drawn for me. And simply on this break, you can see what I wrote here. I assume the reaccumulation model, and now price has began to move somewhat long. Fantastic. So at this moment, does everyone understand at this exact moment in time why the context of CAD JPY is meeting some form of clear bullishness and trend so that we can now follow it? Does everyone understand that? Beautiful. This is all I want to see is yeses. Perfect. And Karen asked, how often does the sentiment get updated? Every single tick. But again, it doesn't change instantly because we are true trend followers, not this bullshit where one break changes everything. Remember that. Okay. Beautiful. So there we are. That's that reaccumulation model, right? Side by side. So it's easier to see. Notice the orange high. There's that orange high. Notice once again how true clouds of liquidity form. A lot of you should be able to remember and understand that almost every single SMC student, retail student, every student in the world, based on what they're learning, is looking at this change of character to go short, at this as a distribution or a UTAD to go short, at this wick to go short as a supply zone, at this head and shoulders to go short, at this imbalance. Look at this perfect imbalance. Oh, it's so perfect. Oh, Everyone wants to do the thing that doesn't make sense because people only understand concept. They don't understand market mechanics. And what did I promise to give you at the very start of this entire presentation? True market mechanics behind trend. So let's continue. The next person that requests control of my screen will be banned instantly, just so you guys know. Okay. The context example. On that same day, 10/16/2023. So CAD-JPY, 1 of 2, the sentiment 80% reading is there. 1 of 2, the sentiment 55% intraday is there. The 2 of 2, the chart context is in a reaccumulation. The longs are confirmed. Now, before I go any further, there are extra premium tools, as you know, and this is a photo from that same day. The premium MENTFX screener, which is available to our MENTFX members, was also on that day showing extreme bullishness. Take a look at this. This is showing you the models and the overall bullishness. Now remember, please remember, you do not need this premium indicator, okay, if you cannot afford to be part of the thing or if you just want to learn a system. This is much more than enough, and just even the chart alone is more than enough. So you don't even need the sentiment, but I'm giving you step-by-step things that you can use. So again, just remember, you do not need this premium tool whatsoever. It's just made for my team, okay? So the longs are confirmed. What is our beautiful next step? Now that we have that 30-minute aligning, the sentiment aligning, everything is aligning on the time frame of entry, in this case, our 1 minute, we want to establish bullishness prior to entry. Now, let me show you how to do that. This can either be a bearish market that has finally started to move bullish. This can also be a very basic market that is already delivering bullish. These are your two examples to the right. Very simple. In the first example, you see a market that was somewhat moving short and has recently shown you moving long. Take a look where the red circles are. In the second example, you see a market that's already kind of moving long, and we just have a red circle. Now, what's interesting about what I'm showing you right now, okay, is that a lot of people think that they need to get involved near the bottoms. I'm going to talk about this in a second, but the reality is where I'm showing the red circle right now is when you should only start watching, not be in a trade. That's where you should start watching. So again, I want to remind you, we are true trend followers. We are waiting for trend to show their hand. We're waiting for the big money to be there, and then we're getting involved. We're not worried about all this nonsense of trying to get in at the very low, at the fucking first change of character, whatever it might be. The red dots mark the perfectly fine times to start watching a market. So in the top photo, that's when you start watching it, that red circle. In the second photo, that's when you start watching it, that red circle. Those are only when we start watching them, okay? Now, the longs are confirmed. We need to establish that there's some kind of money supporting the move. How do we do this? These are some of the outline things that I'm giving you right now. These are going to be part of your trade plan. So again, if you've taken every step so far, you should see how well you are now going to be exercising patience. So how do we show that some kind of money is supporting the move? Number one is the moves are near the top of a range and not the bottom of the range. Again, a symbol and a way to wait for trend. There are bullish breaks to the long side. That's another way to establish that there is some kind of bullish move supporting the move. The moves are already sustaining some sort of longs. Well, if a move is already moving long, that is already telling you that the move is generally long. Okay? So again, we are looking for the easiest things. Like a lot of you might be here and you're like, what? This sounds way too easy. Well, guess what? Most people don't want easy. Why? Because they spent 3 years learning how to trade, and now they're hearing that all they have to do is look for this. They're sitting there like, what the fuck? Fuck this guy. I don't want to listen to him, but guess what? Sadly, that's how the markets function. If your system is complicated and rooted in complication, you're going to lose over time because all you're doing is hoping that you're going to get good results out of randomized actions. What we're doing here today, what I'm giving to you, is I'm giving you clear actions that you can take for specific clear results. And now when you follow the actions and you have a framework for patience and you know what you're waiting for, well, guess what? You're going to find yourself doing a lot better than your counterparts. Most bad traders force the lows. You are waiting for the money to show its hand, not just on this 1 minute or on your time frame of entry, but also with the fact that we waited for the high sentiment reading and we waited for a higher time frame reaccumulation or SSC model. We are showing ourselves right now that money is behind the move. Everything else you have done already, the context, the tools, etc., is supporting this exact thing, right? Everything is supporting the fact that the money is showing where it's going. Here's an example. That is that same day. You can take a look at the bottom here. This is 10:16, okay? Now we're on the 1 minute chart. Now remember where this is happening. This is all happening within the context we already spoke about. We drew it for you. This is happening here. Now I'm on the 1 minute chart right here, okay? Now we're looking at the 1 minute for what? This. Money is coming into the market. How? With any of these things here. Money is near the top of the range, not the bottom. There's bullish breaks. There's bullishness of some sort. The money's shown its hand. Whoops. Did not mean to go to the very end here. Excuse me, guys. Let's go back up here for 1 second. Okay, fantastic. From current slide. There we go. Okay, so here we are on the 1 minute now. That's what we're looking for. Take a look at this red circle, and then take a look at the left of the two diagrams I gave you. Okay? First of all, before I even say anything, does everyone understand why this red circle that I've drawn aligns with one of the red circles at least in the left images? I'm going to have a sip of my Red Bull now. Not sponsored, by the way. Yep. Beautiful. Very happy to see that, guys. So that's correct. Remember, what are we looking for? Remember these things. Now, again, you're gonna have access to it, but remember these things. Moves near the top of the range, not the bottom. Bullish breaks long, moves sustaining some sort of longs. What do we have here? Is the price near the bottom of a range? The bottom of a range is down here, ready for the fur. Oh my God. It's not. The money has moved away from the bottom of a range. Is it near this bottom of the range? Oh my God, it's near the no. The money has moved away from the bottom of the range. So from wherever we're looking, there's money that's already coming into the market. Has there been some form of bullish breaks? Yes. On the MENTFX structure indicator, you've already seen some form of bullish breaks happening to the top side. So now, within that 30-minute higher time frame, which is already showing us bullishness, our 1 minute is showing clear money coming in behind it now. And also, at the same time, I'm going to draw your attention. Look at the bottom here at the MENTFX premium indicator, right? You also have that confirmation of it being accumulation. But without it even, it's clear that money's coming in. Okay. So we have this red circle. There it is. Notice, before I go to the next slide, notice at the moment, we have not taken a trade yet. We have only just started watching the market. Notice how I didn't have to take a trade down here or here or here. Oh my God. This is when I start watching it. And now I'm going to ask you something crazy. Can any of you imagine what's up here with all of these new little 1 minute imbalances and zones? And then on a higher time frame, the same thing's happening. Why? Because everyone is looking at this exact same zone and zone and zone. Those are your clouds of liquidity. Exactly. That's how true liquidity clouds form. That's how you know people are going short. This break here, people are going short on it. The change of characters, blah, blah, blah. Everyone wants to get... It doesn't matter. This is how people think about markets. And this is why when you right now understand true market mechanics, you're going to do better. Okay? Let's go. Notes. No trades have yet been taken. Not a single one. Most traders are focused on the wrong things. Hence why I'm giving you this right now. You have a roadmap for proper trades and when to use and when to trade them. Use it and outperform others. You guys are going to outdo everyone around you, okay, if you follow what's given to you here. Now, the execution. The entry today that we're going to be going over for the execution part is called the ICI, okay? This is what it looks like. It is simply a move, a correction, an impulse, correction, impulse. And this can also correct downwards as well. This is all you're using for the long. You only want to do this once the context is established. All right, mods, please ban Wilhelm. Sadly, he will not be able to participate in the rest of this. And I think that's all for now. Okay, so now we get some new people get to enter some other beautiful members get to enter this amazing breakdown. So the context established. Now we have longs. Okay, ICI is now, this is what we're looking for. The chart context is established. So remember, all of this is happening before we even look for an entry. The context is there. The chart is there. The bullishness has entered the market. The money is behind the move. That is trend being truly established. And of course, for a second, if you flip it, that's your short example, right? Just flip it. It's all the same thing. Everything I'm talking about, you just flip, okay? But right now, as I said, today we're going over bullishness only. So the actual entry, guys, first of all, you will get better at this, but you need to start somewhere. Before I go further, if you keep looking for courses or people that teach you what you think you want to learn, the exact place to buy every time, the signals to earn and learn, the right, you will lose money over time, guaranteed. That's the first things first, right? There is no real such thing as the perfect signal every single time. It's easiest rules ever. I'm just going to give you the EA, blah, 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 blah. That's not how it works whatsoever. You will lose money if you think that that's how you're actually going to learn, because that's not how it functions, right? You get better at this over time. You will get better, the person watching this, especially if you're here right now. Just so you guys know, we are about 45 minutes in. So if you're here, you've already outdone most squirrel attention spans. And at the same time, you're actually learning shit. So that's an amazing thing to do. So you'll lose money over time if you subscribe to this kind of nonsense, okay? There's a lot to this entry. Please remember that. I really want you to remember this. It's a very simple entry, okay? It happens a lot, but it needs to be executed in moments that make sense, which brings us back to context. Remember that. A powerful entry, a good confirmation is something that happens a lot, is very simple, can have refinement to it, which is why I've refined my system over and over and over again to the ICI, but made it very clear for what I look for, okay? But you need to use them in clear context. If you just apply them anywhere and everywhere, just like most other mentors teach you to do with their confirmations, you will lose money over time. Because why? You're creating randomized results from not understanding true market mechanics. Today, you learn trend and true market mechanics. Nonetheless, here are examples of that same day. The ICI simply stands for impulse, correction, impulse. I've coined the name. This is the name I've given it. It is what it is. What's interesting about this entry criteria itself is that in itself, if you think about what it's doing, since you're entering on this right here, you're going to be entering on the breakout. I'm going to show you the examples today. Since you're entering on that, the execution in itself is a form of trend approval, of trend validation. So now you have the trend validation of the sentiment, of the context, of the higher time frame, of the lower time frame with money coming in, and of now the entry that's also showing you money's coming in. Does everyone see how instead of this idea like, oh, the price is too high, there's no way I didn't get in at the low, instead we're looking for, has this market given me every step that's showing me that money is behind this and now I want to watch it? That's what I want you to shift your mindset to. So in the first example, price broke down, money enters the market, red dot, right? So price was breaking down, and then price was breaking long. That's the red dot. That's what I showed you guys right here on GJ, okay? Price was moving down, and it started breaking long, and there it is at the red dot. So simply, that's one of the contexts for the time frame of entry that can be happening, okay? Most importantly, do not force. This is the only way that you actually lose money doing this. I need you guys to remember that if you wait for it to be clear to you, based on your testing and all the stuff that you should be doing as a trader, that this will become easier and easier. As long as you do not force, you're already outperforming most people. And once again, that's a framework for patience. Here's an example. This is where we had the red dot initially. Just so you guys know, this is where I drew it for you. And look what price did. It instantly fell off and kept going down. Do you see any trades being taken in this area as price started going down and I got a discount of my price because now it's in the deeper fib and it's going down so I can get in and there's breaks of character here, blah, blah, blah. No, right? Exactly. All of you are saying no. Good job. There wasn't a trade taken. Notice where my next red dot is. Does everyone understand why at this point I'm drawing a red dot from the standpoint of what you see right here? Has money showed you at the point of me drawing this red dot that there is once again some form of money coming into this market? That's all we're looking for. So some people are saying correction, momentum, reaccumulation. That's not what I'm looking for. Remember what I'm teaching you. This is a blueprint, a trade plan I'm giving you. You need to follow what's given to you. All I'm saying is you have a market that has started moving long. Has that happened now? Yes. What am I looking for? The ICI. And notice what happens. Price begins to move long. And then all of a sudden, it makes the impulse, the correction, the impulse, sideways across the top. That's what you're buy stopping. And then continuation. So now, as long as this low holds, we're looking to take it long. This is the ICI. That is the model that I just showed you. That is this model right here. Now, it's going to take time to get used to it and see it, That's fine. You will get better, but you need to start somewhere, okay? So you have an impulse within that bullish market that's now established, within the 30-minute that's established, right? Notice what's happening here. Look where we are. And look what happened here. Do you guys know what's happening when this breaks this low here? For every other SMC mentorship in the world? Everyone wants to go short. They all want to go short here and here and here and here and everywhere. It's fucking breaking short, guys. Because there's a misunderstanding of what? True market mechanics. And that is creating more, like someone said in the chat just now, that is creating more clouds of liquidity. Exactly. So our entry, as you can see here, is the buy stop of the correction within the initial impulse. I, C, and we buy stop this after this begins to make a pullback, and we protect this low. And I'm going to show you that right now anyway. So here it goes. Today, I want to give you a general template that my members have used to get funded. I've seen plenty of people get funded with this exact template, okay? For the current strategy, the one I'm teaching you right now today, because remember, this is a trade plan. This is not, oh, good luck, guys, have fun. This is the specific things that you can do right now to start getting better. Set up the ICI. There it is. ICI, and we're looking for the buy stop through the high. Stop goes under. Again, over time, you'll get better at this, but at the moment, the stop will simply go under the correction low. And in this case, it's the black circle. So take a look at the black circle, get used to it. If I go back right now for 1 second, I will go back in a sec. That would be this circle right here. This low, so you have the initial impulse, that low is the one that you will protect. Now, you will get better at this. For me personally, I use smaller stop losses, but that's taught in my private, and I'm not going to go over that right now because I want to give you, once again, a full trade plan. Stop under the correction low, the black circle. Buy stop at the high, being this one, not this one. The buy stop goes at the high that was created by the new inside impulse, okay? That was created by the black circle. You target 1 to 3 RR, okay? And you move your stop loss to break even at 1 to 1 RR. That's it. That's the entire system. It's as simple as that. Let's take a look at what happens. So there it is, zoomed in. You have money entering the market. We've seen it enter. This is happening after we've done all the prior work that we've already showed you. Price has made an impulse, a large correction, an impulse, and started going sideways. It's going inside. We protect the black low as our stop, and we buy stop the high. That's it. That is an example of this ICI. Oh my God. I should have taken this out. I didn't know I was giving a presentation. Guys, don't leave. Losses are going to happen. And it is the best thing that you can personally ever have. Okay? Now, for a little pause. Here's my personal account from August of 2023 until October of 2023. So I put this together, like I said, in October. This was my August to October. Something you might notice. Losses are the only way you will make money trading. If you think worrying about losses will help you, then quit. Hey, I'm not here to sell you on my mentorship. I'm asking you to quit right now if you think focusing on losses or worrying about them is going to help you. Please quit. This is not the industry for you. Winners follow rules. And they develop their rules not based on losses, not based on 100% win rate, but rules are developed based on the overall wins plus losses. Look at my curve. The only reason my curve has made money and has continued moving higher is because I have taken losses, okay? Now, again, just very quickly, this 1 million, this is starting at $1 million, assuming August. This is not my real account size. I don't showcase my account size because it does not matter, okay? I'm going to showcase something else important in a second, okay? Quick little quote for the cool people out there. Every trade executed under a rule set is a win, regardless of outcome. And if you can start using the trade plan here, then good luck. And here's just a zoomed in version. And just to give you guys a little bit further information, since this point, what did I say? This was October, right, guys? So August to October, this is August to October. I want you to take a look at my current curve right now from August until right now, November. Nothing has changed. I've continued following my personal rules. And have I continued taking losses while taking my rules? Yes. But it's the only reason that I've moved higher. Now you can see here in this case, I made it $1,000 as my starting point because again, the number doesn't matter. I want you to think in RR. I want you to think in over time expected value. And again, if I make this 1 million very quickly just for you guys so you can compare and contrast what has happened since the October fiasco, right? Here you are. This is where we've gotten. Okay? Let's keep going. Money will leave the markets. Yes, guys, even when all of your contexts are aligned on all time frames, blah, 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 the money will leave the market. This is where we just took our long, take a look, and then look what the market did. It started going short again. Do I care? No. Most traders are going to start forcing shorts again. We don't need to touch shit. We can wait. Notice what I drew here. I drew a red circle or around a red circle where I would want to start getting involved again if money came back into the market. I am looking for money to enter the market, okay? Not getting involved when it's exiting it. And notice how the loss has no bearing on the things I'm doing next. So again, a reminder, the money will leave the markets. Do not force anything. Wait. Again, a framework of patience. Allow new money to enter the market prior to trading. Patience. Look at this. Money's entered the market again, started to enter. It started to go sideways using the ICI, correction, impulse correction. You buy, stop the high, stop loss under the black low. Same thing. Take your trade. Now, if you made it here, so if some of you guys stayed here this entire time, I'm about to give you a very, very secretive sauce, okay? If you made it here, let's go and talk about something important. Guys, am I missing something? I can see and hear just fine, but why am I not seeing the charts? I'm seeing slides only. Okay, I'm not even going to answer that. If you made it here, this is an example of the concept of fractals, okay? This is what over time will also help you pick your trades. A setup itself, so this is something that I'm going to give you as free value that you can write down and use as bullet points to get better despite the trade plan you already have. A setup can be considered better for a number of reasons. One is the prior move. How did it look? What did it do? Two is the kind of move it's within. Fractals within fractals. Models within models. Three, the reading of the sentiment tool. Some of you guys may notice that your best trades are actually only when the sentiment tool is at 60% to 70%. That is perfectly fine. You can create rules around the things that you spot. That is how trading functions. That's how trading works. The usage of other fractal concepts, like the 30-minute analysis we did, but other ones as well. The fractals that it's setting up within, like the image on here and the next. Here's an image and an example of fractals within fractals. Some of you may notice that the best trades you take are only the ones that have fractals within fractals. So notice something interesting about this trade we took here that was a loss. Something interesting about it is that it was just one ICI. Now this trade we're taking, okay, is happening within a higher time from ICI. Look, a bigger impulse, correction, impulse, correction, impulse, and within it, you have the impulse, correction, impulse, correction, impulse. Now don't get too confused by this. Over time, it will make more sense as you get better and better and better. This does not end in 3 minutes, no. This will keep going. But I want you to see that this is one of the ways that a setup can be made better, and that over time, this is something that you may add to your system to get better and better at the trades that you take. So this is an example of a ICI within an ICI, but even then, it's meeting the rules of the trade plan that I've given you, where you have money coming in again within that 30-minute time frame that makes sense, and you still have the high all the way up there to capture that 30-minute run. And now, once again, we have the ICI. You can see I drew it right here for you guys, so you can see it, because again, it might take some time for you to get used to seeing it on a chart. So we're looking for the long. Yes, this is recorded, and it will go to all insider members. Manage your trade. Have the rules and follow the rules. It moves to 1-to-1, we move to break even. It's as simple as that. We now have no risk on our trade. Then close when the rules for closing are met. In this case, you can see that trade ran right to its 1-to-3 RR. Okay, phenomenal. Now, some real talk, guys. Prices will after you close. So prices will do this after you close, guys. Ready? This is crazy. This is going to blow your fucking minds. Prices will, after you close, they will keep going sometimes for 10,000% pips, 100,000 pips plus. Sometimes they'll instantly go back down. Sometimes they'll go sideways, etc. It does not matter. You can become a millionaire by capturing less than 0.1% of moves in the market. You're not here, guys, to be the market. You're here to take your edge out of it. Most traders are still stuck waiting to become the market. Every day they get on, they're like, what's the next move? I will be in the next move. Is it going up? I'm getting it. Oh, it's going down. I'll get in again. I'll double up. I'll average down. You are not here to be the market. You're here to take your edge out of it, which means that even if prices now blew up to all-time new highs, it does not matter. You've taken your edge out of the market. Those are your rules. Over time, you can change your rules. You can refine your rules, but at the moment, especially with this video, you have specific trade plan rules to follow. This is the tip of the iceberg. Your rules for managing, closing, etc. will get better with time. My personal October, a demonstration of management. Making money becomes easy. A lot of you are going to look at my curve here and go, holy shit, I would love to have this curve. I would love to have his rules. I would love to trade a prop firm with him. I would love to have him give me signals. That's because it looks easy now. Making money will become easy, but only once you've done all the hard work. All of it. Let the math play out as it needs to. You only get to a point that you can confidently do this if you put in the work prior, not after. So all of you learn and earn people can now leave because this is not for you. Most people think signals or a simple system is available somewhere. And they undermine the importance of personal confidence and responsibility. They go on to lose funding accounts. They never find consistency. They blame anything but the actual reason, thinking they need to improve their psychology. They should blame their mentor. They should blame their lack of funding. They should blame the prop firm. They should blame the red news. They should blame Joe Biden. They should blame Jeremy Powell. They should blame COVID. It doesn't fucking matter. At the end of the day, you're either making money or you're not. Trading doesn't produce results. Following rules does. There's that trade we spoke about that we just won. Prices are continuing to move long. They reset, and they make another I, C, I, C, I. Here's the image next to it so you can get used to seeing it. We're buy stopping the high. We're putting our stop loss under the black low. Nothing has changed. It's the same rules. It's the same trade. We're getting involved again. Losses are good. Take a look at the very smart, I took about 16 hours to just decide if I should color the losses here or not. Take a look at the color of the losses here. It's green. And green is good. What the fuck? Losses are an extremely good thing for your system. You need to learn to take them, and you need to learn to take them in style. You need to learn to remember that the only way you make money is through losses. So they're a good thing. Let's continue. A reminder, so I'm just going to go back here for a second. Losses are good. Again, why do I make it green? I want to rewire you. I want you to change the way that you think about the markets entirely, which is why one of the first videos in my private mentorship is actually called Wiring Your Mind. It's a 4-hour video on just changing the way people think about this skill set, about the future of this skill set, about how they're going to actually pursue it and get better at and get funded and find psychological improvement, how they should think about losses, etc. I don't do this to sell to you. I do this to remind you that the first thing I do as a mentor when I teach people personally, the first thing I do is before I even talk about the setup, the models, blah, 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 the first thing I do is I say, we need to change everything about how you're thinking. That's it. Because if you don't change that right now, then, you're fucked anyway. Even if you get the best system, you're fucked, okay? Do not let losses in green affect your ability to execute good trades. Remember, we just took a loss right here. Just because we took a loss does not mean we get scared for the day and start to not follow our rules. Are the rules still met? Yes. Is the market still bullish? Yes. Is it still doing so on a higher time frame? Yes. Has the cloud of liquidity above been tapped yet or taken out? No. Can we follow it? Yes. Is the setup for an ICI there? Yes. Where is it? Here it is. I drew it out. ICICI. We're looking for the buy stop with a stop loss at the low. Price starts to move. We move our stop loss to break even. It's moved 1-to-1. Do not undermine break evens and the money that you give up to potentially break even. What I mean by that is sometimes by breaking even here, price will come back, take out your break even, and then go, or even fail. But what we do is we focus a lot on the go, and we go, oh shit, we should have taken that, but we forget about the trades that we made money on by just breaking even. A quick reminder as I go into my own personal journal, and just a reminder, this journal is available privately, not publicly. That's just how it works. You can make your own journal. It's very easy. Just showing you guys this very quickly. Actually, go to the dashboard. Look at this. I want you guys to remember, there are 90 trades I took, okay? Of the 90 trades I've taken since about August, 11 of them are break even. That means I saved, if I'm risking 1% a trade, how much money did I save, guys, on just the break even trades? I just want you guys to really think about this. Yes, I saved 11% potentially, because some of them might have ran, on my break-even trades. And on a $1 million account, right, that is $77,000. On a $2 million account, that's $144,000. And guess what? I recently went to Disneyland. How do you think I paid for it? Simply with my break-even trades. So I really want you to start thinking about the fact that you are breaking even or following rules. You're actually making more money doing so. And the framework of patience that I'm giving you right now, it's actually creating more money for you in the long run. So we move to break even. Important note, that's a quote as well, but I changed the quote. You can go wrong taking a profit. A lot of traders love to say, you can't go wrong taking a profit. If you take some off, you should be happy. This is nonsense. Most signal providers will sell signals where they'll take a profit at 2 pips, then have the rest run the 50 pips, and they'll go, yeah, and 52 pips made. That's not how money works, not how money functions. And if you're not following rules, you will lose money over time, especially if you start taking profits too quick. So you have a specific trade plan in front of you that you should follow until you get better at it and understand how you can potentially refine it to a better state. Do not listen or subscribe to bullshit. Most of the stuff online is bullshit. If you haven't gotten the type of value that you've hopefully received right now, today, and I'm going to give you more, but if you haven't received that value from other places, unsubscribe. It's worthless for you to spend more time on that shit, okay? Let's keep going. Close when the rules for closing are met. Wow. 1 to 3 is met. Close your trade. Guys, let the money come in. I think you see where this is going now. If you don't, keep watching, of course, okay? But money fails back down. What do? We wait for money to come back in. Okay, what do we know? Take your trade. ICI is setting up, okay? Manage your trade. Move to break even when it reaches 1-to-1. Oh no! Allow the market to do what it does. Guys, a little quotation. Prices will, after you close, keep going for 100K plus. Instantly go back down. Go sideways. It doesn't matter. You can become a millionaire by capturing less than 0.1% of moves. You're not here to be the market. You're here to take your edge out of it. This is, again, a tip of the iceberg, and you will get better at it. That's same models, same rules. You take the trade, ICI, it moves, and now it's moved to break even. That's money saved. If this market goes down now, which it looks like it's about to do, you've saved money. That's how it works. So that brings us to the trade plan roadmap that all of you are going to receive in a PDF to your emails as well. Very simply, this is it. This is all you need to follow right now to get better. Sentiment daily, sentiment intraday, higher time from SSC or model, ICI. Take your loss, repeat. Break even, rule is met, you break even, repeat, or you win, repeat. Start to think about this as a process. That's all it is. These 3 outcomes are just as good as every other one. Because over time, if you've done the work, you should know that this will overpower anything else here, guaranteed. Repeat this over and over. Repeat the process. Get better at understanding the process. Start understanding what markets to stay in or out of. You'll get better at this. Develop the confidence to do it. Pursue funded capital with Ment funding or personal growth. Eliminate useless psychological trauma, which is not important. And again, this is the tip of the iceberg. More tools to doing the above in a more concrete way is offered, of course. This video should show you a good example of how I teach and expect people to learn, plus take advantage of their own journeys. Hey guys, a quick little crazy thing, MENTFX.com. This is a curve of all the trades that we just took together in front of you. Hey guys, does anyone notice something interesting about this? We took losses together, we took break-evens together, we took some wins together, but we are growing our account size. This is what happens through rules. Did we focus on the losses? No. Did we focus on the wins? No. We focused on the synergy between all of them together. And as a result, we are making money. Now, as I promised, a special invitation to a lot of you that made it here. Okay? I don't ever do this. I almost never do this. But very quickly, and I'm going to spend like a minute on this, and then we'll do some Q&A and some other shit. Okay? Only until November 22nd, and this does not go for existing members, only for potentially new ones. No exceptions past the date. I will not make exceptions. If you go to mentfx.com/special and use the code MENT, you will get 3 months for the price of 2. That's it. Very simple. But please, if you do sign up, please know, if you do sign up, make sure you cancel if you're not able to pay on the new renewal. Because in 3 months from now, when it renews, it will charge you $300 for the next 3 months, of course. So please, if you do use the deal, if you do, you don't have to, you now have all of this for free, just cancel it if you are not able to afford the 3 months after that. That's all. And it'll give you a lot of time to learn a lot of the great stuff that we have available and hopefully to test our tools that we actually offer there and all that amazing stuff. So here's a few testimonials. You guys can read over it, pause it if you want. I'm not going to go over all of it, but it's just to showcase and remind you that there are people that are in your shoes and that have been in your shoes that are using this and doing amazing. Remember, it's coupon code MENT, all caps, to get $100 off. 3 months for the price of 2, mentfx.com/special. Okay, we're not done. Live examples. So as I said earlier, guys, okay, as I told you earlier, what I'm teaching you here, why not 2 months for the price of 1? Because 3 months is crazier. Okay. What I'm showing you here is something that works on all time frames, is scalable in all markets. Now, some people are going to hear that and not believe it, which is perfectly fine, which is why right now we're going to do a little bit of just side talk. So right now, if you're done with this, you guys are free to go, but it's amazing. It's truly amazing that we still have 988 people here. Mwah, I love you guys. So let's go to my charts for a second here. We were looking at UJ a second ago. Here's UJ, actually, for example. And here's my 15-minute on UJ. This was my trade this week on it. Now, remember, we looked at 1-minute charts just now in that entire test. UJ is something that's been meeting a very beautiful bullish model. There's plenty of opportunities here. This is an opportunity that I personally took this week. It's a simple ICI through the top, and I managed this. I took it long, and I got 3RR out of it. That's an example on UJ on a 15-minute. Now, I'm going to do this relatively quickly, but here's GJ, for instance. It had beautiful trades all of this week as well, right? Beautiful ICIs here and here. Now, I want to remind you guys, I did not take these because I literally cannot take advantage of every opportunity in these markets. There's too many, okay? That's why I'm sharing it, okay? There's too many to take advantage of. But these are both phenomenal entries on a 15-minute on GJ. You can do the same thing on US 100. Okay, sorry, my thing just died. US 100. Here's one that I took personally on US 100 this week. I entered it. Now, a lot of you will see I took a break even on it right here. Whoops, right here. Oh, unlucky. And then it went. Hey guys, do you remember the slide? Prices will, after you close, do any number of things. That's okay. That's how money makes money. Look at this. Okay, let me go to my dashboard. Look at this. Here's that US 100 trade. Look at this. How much did I make on it? Zero. How much could have I made on it? Oh my God. I could have made, 30 RR. I could have made a few $1 million on this. Oh my God. Next time I will hold it. Again, no, that's not how it works. We follow our rules. But here's an example on like US 100. So again, the point being is this works and is the same thing on any and all markets and assets and all timeframes. For instance, if you're trading UJ on a daily chart, okay, this has been bullish, like I made available to you guys since here. Look at the trades available here. Now, it might be hard for you to spot them, but here's an ICI, here's an ICI, here's an ICI. You might trade this one. I probably wouldn't. Here's an ICI. Here's an ICI. Here's one. Here's one. These are all daily based entries. If you entered any of these, if you entered any of these are all perfectly fine entries. And if you follow just the rules I gave you here today, you could make money on these as well. It's the same thing. All we're doing is we're taking a concept and we can apply it as fractally as we want. Okay? I just want to remind all of you that this is something that works truly across all time frames, fractally, and across all assets. So please don't forget that. I've traded cryptos with this. I actually traded crypto like a week ago. See if I can find Bitcoin USD for you guys. I traded gold. I've traded silver. I traded Bitcoin back inside of this move here on a 15-minute. I traded here for a break even, but I traded one right. Where was it? I forget where it was. I believe I traded somewhere inside of here or in here. I don't exactly remember, but there's endless amounts of ICIs absolutely everywhere. And if it's a good setup and it's meeting your rules, there's no reason that you cannot take it. Unlike most things that you learn, I'm not going to sit here and go, oh, okay, we got some equal lows here. We're going to take out the equal lows and we're going to go long. We're going to hit the blood, get the fucking tickle time, but boop, boop, got that. We're not going to sit here and make up shit in front of you, right? Instead, I'm going to give you a fundamental way to view markets and follow the market so you can do it over and over and over again. So Mark says, can we see some bearish examples? Sure. There hasn't been a bearish market that I've been following it recently, but here you go. That's the exact same setup, and this is what it would look like in a bearish market. Okay? That's it. US 100, here's what a bearish setup would look like. It's the exact same thing. There's absolutely no difference. Okay? Easy as that. In the slides, why did you take that last 1 minute trade despite multiple breaks down? Because money had started to enter. It was no longer at the bottom of the market. And again, it was just a clear step-by-step, just initial trade plan that I could show to you and give you access to, okay? Joseph can be banned now. Can you show me where is a sideways movement on this US 100 trade with ICI? Sure, there's plenty, based on the timeframes you're watching. For instance, I made a private video where I went over all the entries that were available in here on a 1 minute. So if you were following this on a 1 minute, just so you guys know, I'm going to show you this right now. On a 1 minute, when the 1 hour, so here we are on a 1 hour, when the 1 hour validated these initial demand zones and began to move long, so you might actually notice something from the video today, guys. What do you notice here? This is a reaccumulation model, and price began to move long, so we can now look inside of it for setups. And if you go to a 1 minute now, okay, these were all potential opportunities that you could be taking based on the setup that you're following. So as prices begin to move long, you begin to watch them, and then based on your specific criteria for an ICI, you can get involved in a number of these. So for instance, this is an example of an ICI. You have an ICICI. That's one example, right? Some of you may be entering this one. Some of you might enter this one. This is a fine trade here. Some of you may be entering this one. These are all phenomenal ICIs. These are all opportunities to make millions of dollars and get funded easily with no issue by following simple rules of ICI until it breaks down. Maybe you take another trade right here, you take a loss, and then you're done. And notice, you can walk away from the market, right? But these are all phenomenal, like 1 minute entries and whatnot. No disclaimer. The disclaimer was done. This is not a guarantee of any sort. You guys know this. Do you use MAs to manage your trades? So MAs and how I use them are taught in the mentorship. That's a whole nother thing. It's not taught the way that you guys would probably think it's taught. It's not like crossovers or any of this crazy shit. It's just an understanding of how averages interact with each other. That's it. Okay. Papa meant, how to know when we should wait for a market flush. When you have the context established, follow the rules that I gave you today. Or join up and get really good at what we do, because there's over 200 plus hours of private stuff where you can learn this stuff. Does there need to be a change of character? So already you can be banned. We don't teach. I don't look for, and I don't even talk about that whatsoever. So good luck with that. It's not what I teach, nor have I ever taught it. I just gave you a full trade plan where I haven't even mentioned that word. So yeah, there we are. But 1 minute, yeah, tons of ICIs here. Just follow this price action and look for this. This is what you're looking for. This is going to happen everywhere. You need to find the context to trade it within. And it's going to happen on all time frames too, right? The daily of US 100 recently was really clean. Look what happened. Prices began to move long off of a higher time frame reaccumulation, and look what happened. You have multiple ICIs, 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 ICIs. Maybe this one, and then maybe you trade this one, take a loss, and now you're back to waiting. Now it's moving long again, right? That could be a red circle. What do you wait for? You wait for a flush out, ICI, and you take a trade based on the trade plan I just gave you. This is the repetition of how markets function. This is what they do. This is how trends deliver. This is how trends work. Look at Apple, like a fucking stock, whatever. Look at it on a weekly. You have the same thing. You have a market that establishes bullishness. And again, what kind of setups do you get on it, right? You get your ICIs, ICIs, ICIs. It resets. You wait for money to come in. Money comes in, ICI. It goes, resets, money comes in, ICI. Goes, resets, money comes in, ICI, ICI. It's the same thing. All markets undergo this exact same thing because it's true market mechanics and true trend. If you allow yourself to play this way, you're going to do very well for yourself. What is a 1 week? If I wanted to trade a 1 week as my minimum time frame, what time frame should I go higher to as my higher time frame? Does anyone know based on the rule I gave you? It's a 30 week, right? That's it. A 30 week. Done. Follow the models on this. So you can either now follow the SSCs or the reaccumulations. It's the exact same thing on repeat. Some of you might play around with it and maybe use a 3 month, a 1 month, right? That's perfectly fine. And notice what you have. You have SSCs that begin to hold, and from here you can begin to watch those lower time frames. You have intermediary SSCs or 2.0s that begin to hold, and you can start watching those on a lower time frame. You have SSCs, intermediary 2.0s that begin to hold, and you follow those on a lower time frame, et cetera, et cetera, et cetera. Now, if you're part of the private, you guys know what we would be doing in this scenario is we'd be looking for type 1 or type 2, 3 demand zone validations. And now we could follow this, right, from here onwards. Those are some of the things that I've taught you guys where I talk about the tip of the iceberg. We can go a lot deeper. Okay, now I'm going to end this out right now. I got across what I wanted to get across. I wanted to share everything that I could with you today. So you can now go ahead, take this and use it truly to help yourself and improve. So guys, thank you. Thank you so much for everyone that was here today. Thank you for pulling up. Thank you for being part of the exclusive people that were able to make it to this live. And thank you for those of you that watched this all the way through in the recording. Now, for all of you that are true MENTFX members already, because I know you guys cannot take advantage, okay, of the MENTFX discount, I want to give you something very, very special that you can or can't use it based on what you want to do. I don't really mind. This is up to you. So now this is just for the MENTFX private members, okay? Thank you for being here. So if you guys watch this in the aftermath, this is for you guys. On Ment Funding, okay? If you simply go anything above a 25K, okay, anything above a 25K, simply whatever you want, you know, get your things going, all the upgrades you want, click on discount, and use the discount MENTHUB, MENTHUB, and press verify. This is going to give you $170 off of any purchase. Why did I make it $170? Because that's about 2 months of free mentorship just coming right off of your price here. So thanks to you guys for being amazing members. Now, again, you don't have to use this whatsoever if you're not in the place to get funded yet, but this is for you to thank you for being members already. And again, hopefully this little bit of value showed you why I share what I share and how I share it, right? Sorry about that. Yeah, we'll hide that after. All right, guys, listen, thank you all so much. You guys are amazing. Like I promised, I wasn't going to waste time. I was going to come here to do exactly what I wanted to do. And now you have a full trade plan that you can use yourself. All codes expire on the 22nd of November. So if you want to take advantage, here's your final chance. mentfx.com/special. Okay. Use the code MENT. You go here, you click on the coupon, MENT, all capitals, apply, boom. Make sure you cancel if you cannot afford the 3 months after this one ends. Blessings to all of you. Thank you all for an amazing webinar. Thank you to the 1,000 of you that were able to sit through on a beautiful little Wednesday. And I will see you all, hopefully, in the private mentorship on the next public video or in the next insider video. Stay tuned, everyone.